lot of people, they don't even know what fund they're in, what name it is, whether it's a balanced option, high risk, none of them even know it. The biggest thing in Australia is the only contact that they really have from a retail fund. A lot of the time it's to chase fees. I feel like you go into a pool of like a generic type of investment. I really do sometimes question whether that's best interest for the clients. If you're at your max in your personal name, you can't get lending in an SMSF, and it's not true. The banks consider it a separate entity and a completely obviously separate investment vehicle.
Yep.
So you could have a client that comes to you that has, no capacity in their personal name, but they could still buy, 700 to $1 million in super. It's a completely different method of assessment.
Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Hey guys, just a quick disclaimer and just a reminder that this is not personal advice. So make sure you speak with a licensed advisor before making any investment decision. Today we have Alex from Piermont Advisory joining our podcast. Alex, welcome.
Thanks for having me.
No problem at all.
It's a pleasure.
Yeah. You guys specialise in property and specifically property through SMSF. Why do you think Australians are choosing property to purchase property through SMSF?
I think many people are utilising SMSF nowadays to take control of that asset. Previously, there wasn't a lot of education around the space. A lot of people are becoming savvy investors and they understand, the difference between property and shares. I think all in all, it really comes down to being able to leverage the bank's money and being able to buy something that's tangible that they can control, and bricks and mortar, something they can drive past, touch and feel. For us, it somewhat feels a bit mundane having it, with a retail fund, not knowing where the money's going, and just having it all invested, on someone's behalf. So I think a lot of it comes down to wanting to utilize the biggest asset class in the world, which is property.
Yep.
As well as having control of where their money goes and their destiny for retirement, really.
Yeah, I guess most Aussies have had a pretty positive experience with property and I guess understand it, and having, like you say, having that ability to have leverage, that power of leverage over the longer term for those more those clients that have a bit more of an aggressive sort of risk profile. I guess see the benefits over the longer term. It's certainly hard to beat once you're adding that leverage into the mix.
Yeah, absolutely. Like we've, we see clients, that have gone on when you actually work out the projections over like a 15 to 20 years, and it's a phenomenal difference. The easiest way that I explain it comes down to leverage. That's the biggest component for us anyway.
Yep. And obviously those tax advantages when they sell in retirement.
Yes.
Typically it's tax-free.
Correct.
So that's, I guess, a big advantage of, I suppose, having. Do you find clients, once they realise that they can, the tax advantages of purchasing property through super, are you finding you're still stumbling across clients that weren't aware that they could actually use this strategy? Yeah,
that's a great question. We are, like, a lot of people, you're not taught this in school. I feel like a lot of it comes from like a barbecue conversation or somebody, or knowing a friend of a friend that's done it and, achieved fantastic returns, and then that gets passed down. I think there's a misconception. A lot of people think that it's this very difficult task. It's high risk. The fees are exorbitant, when it's really not. If you've got that right team around you that can guide you and, assist you in the tax, sector, as well as choosing the right property, it can make a massive difference. Once the fund goes from that accumulation into the preservation, as you're aware, it can make a massive difference if you're accumulating strong high growth assets to then, look at selling at a later time.
Yep. What are the main benefits of taking that approach compared to traditional investing? Obviously, we've talked about the tax benefits, but are you finding clients become a little bit more engaged once they've decided that they're choosing property as an asset class, as opposed to leaving it in a retail or an industry fund that sort of haven't really been engaged with their retirement savings, and then all of a sudden they've stumbled across this strategy, and all of a sudden they've sort of perhaps opened up their minds a little bit, and do you find they become a little bit more excited about, their retirement savings?
It almost feels like it's not their own money and it's not tangible when it's almost, left in a retail fund in my experience dealing with, thousands of clients that do this. When they make that decision to go into an SMSF, there is that level of excitement that they're actually in control now of where their funds are going, and to really set themselves up and their family and leave a legacy, if they've got kids, and really get a better retirement for themselves. A lot of people that we come across, they don't even know what fund they're in, what name it is, whether it's a, balanced option, high risk, none of them even know it. And I think the biggest thing in Australia is the only contact that they really have from a retail fund. A lot of the time it's to chase fees, or the moment that clients do make that decision to then go into an SMSF space, like a lot of companies and corporations these days, they have a retention team, and it's the only contact they might have over a 5 or 10 or 15 year period of a retention team of a retail fund trying to save that client. Because I feel like you go into a pool of almost like a generic type of investment. And I really do sometimes question whether that's best interest for the clients. So yes, there is definitely a huge level of excitement when they feel like they can, control where that money is going and do things like buy property.
Yeah, perfect. And are you finding clients are more, typically in the resi space? Are they more sort of leaning towards residential, or what sort of subsector are they sort of mostly leaning towards?
Yeah, I think areas where there's little vacancy rates and, you're able to rent that asset out. I feel like a lot of people nowadays are leaning more towards newer property, because they don't want huge maintenance bills, that can come up in the SMSF.
Yep.
So for me, I find that buying property is just a lot more tangible, and they're really getting a good experience from that.
And so clients that perhaps don't know where to start, for example, they might be interested in this strategy. They've sort of been thinking about it for quite a long time, haven't taken that step. What would your advice, or what would your comments be around to those clients that sort of have thought about this strategy but haven't sort of taken that step?
Yeah, so I think it comes down to just having the right team behind you. We assist clients from every walk of life. Somebody that, has multiple properties to somebody that's a first home buyer or doesn't understand the space at all. I think it's just about being informed and educated and being with that team that does it every single day, day in, day out, and then having that level of education to then be able to, make the right informed decision based on what you and your family are trying to achieve, and then what your goals are, and then working backwards. In the SMSF space, a lot of the strategy is dictated by the lending, the finance, and using the bank's money, and the SMSF lenders dictate, the next 5, 10, 15 years. What assets do you buy? Where do you buy? And really it formulates that investment strategy based on the underlying, what is the borrowing capacity for the fund.
Yeah. Just on that, we're sort of seeing we're on the sort of flip side to the interest rate cycle, where we are seeing sort of rates starting to slowly trend back down to sort of pre-COVID sort of levels, or normalised levels.
Yeah.
What have you found that has sort of spurred the market on, and people are becoming a little bit more interested in property and the demand? Do you feel that's sort of changing in the current cycle we're in?
Yeah, massively. The biggest thing for us, when interest rates come down, because they were at a higher interest rate for the last few years, a lot of people were priced out of the market. So in turn, with the interest rates now dropping, it's creating a lot of fear of missing out, and that type of psychology in the market. So a lot of people are now rushing in when they were previously priced out, to try and, quickly obtain an asset before the prices continue to rise.
Yep. What about with clients that perhaps may have, they may have reached their borrowing capacity outside of super, or that they want additional, they do want another property.
Yeah.
Are you finding that they are sort of leaning to the SMSF, those particular clients are leaning towards SMSF because perhaps their borrowing capacity out, and when we talk about borrowing capacity, we're talking about, can I buy another property in my own name and receive some tax benefits? You go to the bank and they say, well, sorry, but you've reached your limit.
Max. Yeah.
You're at your max. But when if that is the case, what you can do is purchase. You can still purchase property, but just purchasing it through a different entity, and an SMSF being a good one for that. If it's suitable, if you're getting the right advice. But you're finding that those particular clients are sort of leaning to the SMSF space because they can't borrow in their own name anymore.
Yes, absolutely. So there's two things. It's a great question. So a lot of people, there's a misconception that, if you're at your max in your personal name, you can't get lending in an SMSF, and it's not true. The banks consider it a separate entity and a completely obviously separate investment vehicle. So you could have a client that comes to you that has, no capacity in their personal name, but they could still buy, 700 to $1 million in super because the banks are assessing the borrowing capacity on the super fund and the, income contributions, and it's a completely different method of assessment. So there definitely are those type of investors in the market that they've reached their max of lending in their personal name, and they still want to be able to buy property, but they don't want to do things like, invest with other family members or, bring other people or friends, etc. to, an investment. So then they now are being more educated and they're looking at that SMSF as another method to still be able to buy property when they weren't able to because finance had hit a ceiling in their personal name.
And so those that don't know where to start, I'm assuming I know you work with a number of different providers and professionals that work with the client to help them down this path. So I'm assuming you've got a fantastic finance broker or finance brokers that you work with that can assess a client situation and then give you a borrowing capacity. When we talk about borrowing capacity, how much the client can borrow in their SMSF. And then from that point, you then go and source a property for the client. Is that sort of
that's exactly right?
The process.
Yeah, that's exactly right. So with our method, it's basically finding out what the client wants to achieve and then reverse engineering that with the broker's lending capacity. So it's about the client, understanding what a 5, 10, 15-year plan is and what their goals are, passive income, what their asset position wants to be, and then working backwards. So the biggest thing that we look at is once we get a client in that position, we put them to the broker. The brokers that we work with, they're amazing in that space. Like they're, in the top 100 in the country for this lending method. And they really, because they do it day in, day out, and they specialize in the SMSF space, they will then, give the client that borrowing capacity. And then that dictates really the investment strategy, where to buy, what type of asset, and what does that look like to buy multiple assets. It all comes down to the broker and working with, a very good broker that's experienced in that field.
I know, just talking to yourself earlier, you talked about availability of stock. The demand is quite high and supply is quite low.
Massively.
We know that those two fundamentals combined do one thing to asset prices, and that's drive them up. How are you going about sourcing assets or properties for your clients? And I know it has been a bit of a struggle, but how are you going with that? And are you working with developers closely to get special allocations for stock and things like that?
So with us, it all comes down to relationships, and because we've done this for quite some time, we work independent, so we work with a lot of different vendors around the country. So it comes down to going directly to the source and trying to find something off market before it's hit, a platform like realestate.com where the client's then losing out already on a margin. So for us, we go directly to builders, developers, and, we've got those relationships already in place. So we can negotiate, a piece of stock for a client directly off market. And that's really how we do our core acquisition methodology. And then, we can save 30, 40, 50K on an investment property for the client up front. And then, I'm a big firm believer of you make a lot of the money and the bulk of the investment when you buy, not necessarily when you sell, because you want to be entering the market at a really, a good price essentially. So, it definitely is very hard. to find stock and find good stock.
Yeah.
Because there's no supply. As you said, the demand is through the roof.
Yeah.
But the supply is significantly lacking, especially, in Southeast Queensland, I use as an example, migration, interstate and overseas immigration, we're at record numbers, and we're just not simply delivering enough properties to sustain the level of migration that we're experiencing.
Yeah. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. Immigration is obviously a bit of a hot topic. We don't really have the infrastructure or the housing to sustain or support current levels.
Yep.
Putting further pressure on supply levels and demand levels, and obviously pricing. Where do you think, we talk about those sort of fundamentals and rates coming down, and where do you see these asset prices in sort of 10 years? We've got obviously Olympics coming to Brisbane, Southeast Queensland, 2032. You always think retrospectively, I wish I had bought 10 years ago, I wish I had bought 10 years ago. Do you think in 2032 we're going to be sitting here and going, man, I wish I had bought 10 years ago?
Yes, I completely agree. I think that is the exact sentiment that everybody's going to be having. I cannot see the market. There's no really significant factor or driving force that's pushing it backwards. To your point, the Olympics is a significant driver of the market, especially in Southeast Queensland. It doesn't matter what government is in play, whether it's Labor or Liberal, they are forced to deliver a level of infrastructure, stadiums, Bruce Highway Road upgrades, schools, hospitals, to deliver a product to really sustain that Olympic Games coming the next 7 years. So for me, I see the market as very much, you've got to get in as soon as you possibly can. And this is the advice I'm giving to a lot of people, because in the next 7 to 10 years, people will have the same sentiment. If you look back on markets like Logan, Ipswich, markets of Sydney, nobody predicted where the markets were going now over 7 to 10 years. Now that it's happened, and there's prices in a Logan or Ipswich when you could buy for 7-8 years ago for 400K for a house and land, and now they're selling the same asset for 900. It's become a lot more real. So I feel like that's given people a big push to try and enter as soon as they can. Where I find people go wrong is they're not accepting of the market conditions. They look and they say, oh, well, I was able to buy this back then, and they're not accepting of the current market situation. And you've just got to bite the bullet, and you've got to look at where does your money go the furthest. And you still have to identify a sub-market that isn't, reached a ridiculous amount of level of inflation. But if you zoom out, everything is really at the peak of wherever it's been at the moment. So, my biggest advice is to try and enter a solid investment as soon as you can.
Yeah. I think that was my advice that I received 25 years ago.
Yes.
When I first bought my first place.
Yeah.
Was had someone looking after me back then, and the advice was back then, it was like, doesn't matter, just buy something.
Just get in the market.
Just buy something. And I did, and and it served me well.
Yep.
I think I bought it for $237, and I think I sold it for about $500 only about a couple of years later. So it was very easy money back then. It's not always that easy, but but certainly can't buy anything around that price anymore. But fast forward 10 years, it's going to be the same thing, where we're looking back and going, oh, geez, wasn't 700, 800, 900,000.
Absolutely.
How cheap was that?
Yeah.
So with your advisory firm, Piermont Advisory, what percentage of properties are you selling inside a super and outside?
So currently we're sitting about, I'd say 65 to 70% of property within super.
Yeah.
And it's to your point you brought up earlier, where a lot of people, because the interest rates have been at that higher side, a lot of people want to enter the market, but they're priced out.
Yep.
And then they've, come across, somebody that has done it previously, like a friend, a relative, etc., that's bought in super and achieved some phenomenal returns.
Yep.
And they want to experience that as well, and they want to take control of their asset position. And when they start to learn and understand that, they do have that level of excitement, and they're really engaged.
Yeah.
So for us, it fluctuates, but currently it's close to 70% of our entire firm that's doing SMSF. Yeah.
I know before, previously, when you were setting up SMSFs,
Yep.
can you explain a little bit about the process and what were the pros and cons,
Yeah.
and what were some stumbling blocks that what were the things that sort of annoyed you the most, I guess?
Yep. So for us, we're dealing with off-market opportunities that, as you said, like they're very difficult to source. When we find something that's a very, very good buy, it gets snapped up very quick. So time essentially is of the essence. What our experience was previously is the SMSF administrator or the companies that set up the funds, they weren't working in a timely manner. So then a lot of clients are actually losing out on opportunities, which, in turn is worth hundreds of thousands of dollars to the clients. So for us, it comes down to being able to generate that bare trust and have that corporate trustee and the structures set up in a timely manner. And that is critical, especially when we're dealing with property that, there's a very big lack of supply. So we're dealing with 2, 3, 4 buyers a lot of the time on a single asset. So if you're not quick, you're simply going to lose out on that opportunity, which, in turn is worth a huge monetary value.
Yeah. So the ability to generate the entity details as quickly as possible.
Yep.
You found that was a bit of a stumbling block previously.
Yeah, correct. Being able to deliver the entity details, because then you're essentially satisfying the vendor, being able to go to contract and fully securing that asset for the client. I've had people that have taken 3 or 4 weeks to do a bare trust. When we've worked with you guys, we can have it done in a day. It's completely different worlds. That has been significant in our growth, as well as being able to, single-handedly make clients ridiculous gains because they're dealing with off-market opportunities that are very scarce.
Yep.
And then us being able to satisfy that and secure the availability has been an absolute game changer to us and the clients.
Yeah, fantastic. And how has the experience been? I know we've been working together for some time,
Yep.
and I think typically when we're working, we first meet advisory firms, anyone dealing in the property space or with SMSFs in general, they haven't found the process to be they found to be quite clunky,
yeah.
and not quite very streamlined, and it takes a lot of time.
Yep.
And a lot of them, I feel, are very skeptical about
Absolutely.
About the way we do things. So yeah, how has that sort of, was it a surprise to you, or how have you found the service with Blue Chip SMSF services?
So yeah, the service has been phenomenal. Honestly, it's you guys are, I take my hat off. Like, you absolutely are the best in the business in that space. We've worked with a lot of companies over the years. Like, I've done this for a very long time. As I said, worked with thousands of clients, and it takes us a very long time before we're comfortable to recommend, a team around that client, whether it's the SMSF administrator, a conveyancer, or a broker, because we really need to go through those tests and tribulations to basically wear that and have them deliver the same level of service that we would. So for you guys, it's absolutely, best in the business in that SMSF space, because the entity, the communication to clients, every single client that we have that comes to us literally goes out of their way and says how phenomenal the service has been. I actually remember a client of mine who's buying multiple properties. He's actually a school principal, and he's been in the industry for, customer service industry, client facing for 30, 40 years as a headmaster down in Newcastle. And he actively gave me a ring one day, and he said, honestly, I thank you so much for recommending Paul and Troy and the team at Blue Chip, because, in all of my years, they just have been phenomenal when it comes to the customer service, and everything has just been easy, mapped out. They've held our hand through the whole process. setting up the bank accounts. Whenever anything didn't make sense, they were only just a call away. So, that's the sort of feedback we're getting from all of our clients, which we never had previously. So
Yeah, fantastic. Oh, that's great. Then what would your advice be to, say, clients that, as I said, I know we've talked about this before a little bit earlier, but that are sitting on the fence and have thought about this strategy? What would your advice be to them about getting started?
it's a matter of just being informed and educated, and
Yep.
then trying to enter the market as soon as you can. When you understand what your investments goals are, you can then really work backwards from that, and then you can then make an informed decision. If you've got that right team that does it every single day, day in, day out, and they know the industry like the back of their hand, it's really simple. My advice is to try and get onto a good solid foundation of a team as possible, as quickly as possible, and then enter the market as soon as you can. Buy a good capital growth performing asset, blue chip, close to capital cities, close to infrastructure, and buy and hold.
Yeah.
If they are going to sell early, don't just sell and keep the money there. I always look to reinvest and move on to the next thing. Buy another asset, swap them out. You've got to keep ahead of the times and be innovative, and continue to try and grow the balance.
So should someone start by setting up their SMSF first, or should they be looking at the property? What do you guys sort of recommend in that regard?
So there's no right or wrong, because we deal with people that are in the middle of their SMSF setup, are just about to explore it, have got it established already. I think it just comes down to what they're trying to achieve. Once you work backwards and you figure out, okay, this is what we're trying to achieve over a 5, 10, 15-year plan. When does the client want to retire? What do they want to retire with? And then moving them to the broker and determining what their lending space is. It really doesn't matter where they're at in terms of their SMSF process. It's just a matter of, determining the finance and seeing what is actually achievable within this fund.
Yep. I suppose setting up the fund is once you've got the right team,
once you
simple
work,
process.
absolutely.
So it's not one less thing you have to worry about.
Yes.
So I guess the main thing at the moment is obviously trying to find the stock. And
yes,
and
if you've got a team like you that sets it up timely, it's absolutely not an issue.
So, Alex, when we're talking about property, is there any specific states or major capital cities that you feel are a standout or perhaps undervalued at the moment?
Yeah, I get asked this a lot, actually. There's a lot of companies in this space that use, marketing, terminology where they talk about hotspots and all of this. A lot of the investment firms, and the good ones anyway, they're all using the same data points and research that's, available. The big thing for us is it's essentially guided by the client's budget. Southeast Queensland is really hard at the moment to miss, because it's, Southeast Queensland, it's got the Olympics that's a massive driving force for the entire sector. I'm very bullish on that Moreton Bay and that northern pocket between Brisbane and the Sunshine Coast. Caboolture, Morayfield, Narangba, North Lakes. There's still some really good potential up there. The other areas that I really like, Toowoomba, Plainlands. Toowoomba's very, very undervalued still. I see Toowoomba going to a similar market trajectory of where areas like Logan and Ipswich were going, and it's got less of a crime rate and a better demographic in our research that we've done. We don't do a lot in WA. I'm not a big fan of WA because I feel the resources sector is the main driving industry. When we do our sort of micro and macro analysis of a market, we want to have like a minimum of at least 6 to 7 different industries that are driving the sector to fall back on. I feel like COVID was, a very big driver for people to basically make sure they're not relying on just 1 or 2 avenues of growth, especially even with property. So Brisbane, Southeast Queensland, that northern pocket. Victoria's difficult. there is quite a supply of property there, and the crime rates in Victoria are at record numbers. The rental yield is a bit lower.
Yep.
So it's a very hard market to source decent assets in, and the challenge with Victoria is valuations. So for us, Southeast Queensland is really our top pick, and then
Yep.
it's followed closely by Adelaide.
Yep.
Adelaide has a big public sector spend.
Yep.
They've got the nuclear submarine fleet that's about $3.3 billion. And then they've got the defense facility up in the northern pocket, a lot of blue collared workers, and your money still goes a lot further.
Yep.
But ultimately it still will come down to the client's budget,
Yep.
as to where do we look to buy. If they've got, 600 to spend versus 900, it's a very different market and type of asset as well.
Yeah. So when you're talking about budget and you're talking about states, obviously, I guess that brings me to the next point. What are they typically buying? Is is it home and land? Is it units? Is it townhomes? And I'm guessing that really depends on their budget as well.
Yes, correct. Yeah, it really does depend on their budget. A lot of clients, they want to buy house and land. You can't buy, a construction and fund a construction in the super fund. It has to be a single contract. So where I see people do get stung by that is vendors, when they're covering that holding cost, they put a huge margin on the property purchase. I've seen it happen very common in Victoria, where they're adding, 10, 15% on the purchase price to turn a house and land, into a single contract that's compatible with an SMSF to buy it.
Yep.
So I'm a big fan. I do like townhouses because I feel like it's a balance between still having a land parcel and, still having a physical asset like a build and a land component.
Yep.
If we're sourcing units, it's very budget. It depends on the budget, but if we are doing units, we look at low density type areas that, only might have 50 or 60. It's very boutique. We won't touch a high rise, for instance. Low body corp, very little amenities to keep that running cost quite low. So if we are doing a unit, that's really our fundamental, or we're looking at a townhouse. But, to your point, it is very heavily reliant on the client's budget.
Yeah. And so you've got sort of Southeast Queensland being the hot spot, I guess, to
Yep.
some degree.
Yep.
With the main driver being the Olympics and the infrastructure spend and
Yes.
the amount of workers that requires to fulfill all of that infrastructure, those
Yep.
infrastructure projects over the next 8 years.
Yep.
So you've got all of those fundamentals, and then obviously trying to find completed stock is obviously an issue, and then
Yes.
it comes down to the client's budget, whether or not it's a unit, a townhome, or a home and land. And we talk about one part contract. What Alex is talking about there is within superannuation, you have to have what's called a single acquirable asset, and when you have a home and land package, which normally people do outside of super, that's considered two acquirable assets, the home and the land component. So within super, it has to be just a single asset, and that's why it needs to be a one-part contract. And
Correct.
as you were saying, you've got these companies out there that are doing, that are turning these home and land type packages into one contract.
Yeah.
By, I guess, funding it the whole way through, and
Correct.
then you're paying a bit of a premium for that. You're saying 10, 15%. That could be $100,000 extra you're paying.
I've seen companies that are doing it close to 200 grand. So, it's a huge amount of capital that the client's starting off on the back foot. So, that's the challenge, is if you're starting in the negative by 100 to 200 grand, it's not a small sum, especially for a super fund.
Yeah. What are some of the common sort of questions or myths that you come across?
Some of the common myths are, that it's this crazy amount of risk, and there's crazy amounts of fees that are associated with this type of investment strategy, which it just quite simply isn't true. It comes from that education piece, and you don't know what you don't know. A lot of people aren't taught this. Like, 4 people that deal with this every single day, and they've done it and it's been tested. Really, I look at it as the client taking control of their asset, and a lot of the people that we do work with and assist, they're just moving their fund from a retail fund being heavily exposed to the share market and taking that out of the equation and just, whether it be diversifying or, buying property as well as keeping some in shares. That's really as simple as I look at it when I try and explain that to clients. And the amount of growth that you can experience on the property, because you've got that leverage component, it blows out, the amount of growth and capital appreciation of that asset is nowhere near the amount of fees or the establishment costs, or the running costs of an SMSF. It's nowhere near the ballpark.
Yeah, when clients sort of head down this path, it might have started with 300,000, and then they've purchased an asset worth 900 that's now worth 1.2 or 1.3, which means they've doubled their initial $300,000 investment. What's the feedback been like with regards to their overall portfolio?
It's life-changing. And a lot of what we experience is people coming, achieving that result over a 3 or 4 year period, whatever it might be. And they all say the same thing. They say, we wish we did this sooner, because they don't think it's real or tangible until they actually take the jump and then see the return. And then it stems from that education, and then they want to go again. They want to look to, how do we look to now further increase our asset position and buy another asset? And then that's when we do, a business, it's almost like a business review where you're looking at your total asset position, what are the funds left over? And then you're basically working with the broker to see, how do we now look to buy a secondary asset? Yeah. But it's life-changing. They've changed the entire trajectory of their family and their legacy they're leaving behind.
Yeah, that's fantastic. I know when we've sort of revisited clients, over the years, and you can see, you look at their P&Ls and you see, how phenomenally these guys have done over, they've sort of started 10 years ago or even 5 years ago or even 3 years ago.
Yeah.
And you sort of look at their portfolio. It's quite nice to see when you do see some success there with some clients. It's a really good feeling to know that you've helped some of these clients that perhaps, were sort of didn't really have the guidance or the know-how in the early days.
Yeah.
Alex, if anyone is looking to purchase property, how can they get hold of you and find you? How can they engage you?
Yeah, so they can jump onto our website, www.pimonadvisory.com.au, and feel free to book a call in with one of the team. We'd be more than happy to do a complimentary call to, go over our strategy, how we work, our research process, what the client's wanting to achieve, and really set them up in the, with that right team, and then look at, what are their goals. And, we are different in the space where we don't charge fees to clients. We don't have a fee for service model. So how we operate is, if we work with a client and, we source a property off market, we invoice the vendors, whether, that's a developer or builder or whoever it is, we work independent. So, even if it's for a complimentary chat, just to understand what's achievable, we'd be more than happy to, book something in.
Fantastic. We'll also drop your details in the section below in this podcast. But it's been great having you on the show, and thanks for coming along.
Thanks so much for having me.
Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF, or book a call with our team to see if we can help you.